What's good? Big Playmaker giving you some news you can use. If you're new, I need you to like the video, subscribe to the channel, and I need you to share the video so we can get this free game to where it need to go. Alright, so start off. If you would have watched my previous video, we talked about how to read charts and how to sign up with a broker. And today we gonna actually speak on how to buy a stock. Alright, and again, I'm doing these tutorials step by step because I got a lot of new people I'm working with that's in the group, you know what I mean? So if you know these basics, then you could just move on to the next step, you know what I mean? I'm gonna be dropping these videos consistently, and I'm breaking down each step from the very first point to where you need to create your account and register with a broker, all the way up to the more advanced techniques and all that stuff, you know what I mean? With the options, ETFs, all that. But yeah, we're gonna get into that on a whole nother video. This video, we focusing on how to buy a stock, actually buying the stock. All right, so if you did your research and assuming that you already signed up with a broker, you got your application approved and made you a deposit, we're gonna look at how to buy an actual stock, what stocks you should buy, and basically what stocks will be good for your portfolio. We're gonna look at Robinhood. Robinhood is good to start off with. I'm gonna go over and tell y'all the pros and the cons of Robinhood, the good, the bad, the ugly. Robinhood attracts new investors because they have low fees, zero balance requirements to open an account, and they have this easy to use interface. As you can see here, it's pretty simple, straightforward, you know what I mean? It's not too technical or nothing like that. So this is more for on the go investors, for those who want to buy and hold. So you have the easy to use interface, it's easy to read, easy to maneuver through, and it's pretty much, you know, everything that you need as far as buying a stock. And the con is the quote delays. If you look at the stock on Robinhood as opposed to another broker, you might notice a delay in the quote and the actual price. And I personally, that's why I quit using Robinhood, which I'm not trying to discourage you to use Robinhood, because if you're just starting out, Robinhood is what you definitely want to start with, because it's a simple interface, it's easy to use, and you know, it kind of gets your feet wet and get you a feel of how investing works. All right, so yeah, I started off with Robinhood. I went to Webull, then TD, and you know, so forth. Now I've been sticking with TD. Robinhood don't have as much options as others do, but there's pros and cons to each broker and platform that you use, and it's just up to you. Do your due diligence and find out what fits your style better. So on to the cons. The spreads between the buy and the sell orders on crypto are often larger than other platforms, and I can vouch for that personally, again, because let's say you see Doge right here is 7 cents. On another platform, it might be like 5-6 cents. It may not seem like a lot, just like gas prices, that extra 10 cents may not seem like a lot or whatever, but it definitely makes a difference when you purchasing an asset in bulk. It makes a big difference, and you know, those fees add up to a hefty fee. So anyway, their payment for order flow practices can prevent you from getting the best price on trades, which again, that will affect if you buying in bulk. If you buying fractional shares, it wouldn't affect you as much, but it adds up. That, and also the outages on Robinhood on high volume days, like investors are trading events and the news and things like that, and high volume is going on, then that's a no-go for me. That's an automatic red flag for me. That was my breaking point for Robinhood, to be honest. That's when I moved on to Webull. I outgrew Webull. That's the only reason I quit using Webull. Webull's actually a good platform to use, and it's in between Ameritrade and Robinhood, so it's levels to it. Robinhood is where you're gonna start at. Webull is the next step, and Webull actually got those options that Ameritrade is what I primarily use, but you can trade pre-market and after hours on Webull. I have accounts with all these brokers. I can really trade anyone, but I just like to stick to one. You gotta plant a seed and let it grow. This is Robinhood. This is my broker account. It's been probably about like 2 years now since I used Robinhood. Another thing with Robinhood too is the charting. You don't have as many indicators. You don't have access to as much information. You got the candlesticks, you got MACD, RSI, volume, moving averages, and that's pretty much all you need on the chart. You don't need to overdress your chart because it's like a bunch of confusion, and you're just gonna have trouble reading which lines is which. That could throw your analysis off. You can pretty much read, you can see see what goes on in this chart, and the time frames you have only a daily, weekly, monthly, 3-month, 1 year, and 5 year, which is good for a beginning investor. Keep that in mind. You don't have intraday charts on Robinhood. So with me being an intraday options trader, Robinhood is not for me. I could use their chart that's in the 5-minute time frame on the daily, but when I'm scalping, I got to use the minute, the 5-minute, the 15-minute, and the hourly. Like, it's 4 charts. If I show y'all my interface and what I got set up in Ameritrade, I got 4 screens right here. So I got 2 charts here, 2 charts, 2 charts, you know what I mean? I get technical with it, you know what I mean? So moving on to actually buying a stock. Which stock should you buy? For one, you want to do your own research, not solely rely on anything that anybody tells you, because to each their own, you know what I mean? As far as a seminal in the portfolio, you definitely got to create your own lane. The S&P 500 is an ETF, an exchange traded fund, and S&P stands for Standard & Poor's 500 exchange traded fund. So here are the top 10 holdings: Apple, Microsoft, Amazon, Tesla, whoop-de-whoop. There's an acronym for the major 6 companies that make up majority of the S&P 500, and it's FanMag: Facebook, Apple, Netflix, Microsoft, Amazon, and Google. Just those 6 stocks make up just under half of the whole index. It's around actually 43%. That's one thing you can look into investing into. We're gonna go over the market order. A market order is when you buy in at the ask price. Limit order is when you buy at a certain price. Let's say it's trading at $3.90 right now. If you buy it, you're gonna buy it at $3.90. On the market order, you're gonna buy it at this price right here. If you place a limit order, you want to wait till it comes back down to like 380, 385 or something like that. If you had a limit order for 385, once it touched 385, your limit order would be triggered for you to buy. You will put the amount that you're looking to spend, and it tells you how much that you'll be getting. So let's say you're spending $500, you're gonna get 1.2 shares of this. Or you can switch to shares. If you want to buy 1 share, it's gonna tell you the price that you're gonna pay. Buy 10 shares, you know, it automatically do the math. This is your cost right now at the price of $3.90. You're gonna pay $3,902.50 for 10 shares. High growth stocks like Realty Income is a company that owns more than 6,700 commercial real estate, over 600 tenants, including Walgreens, 7-Eleven, FedEx, Dollar General, etc. These are a couple growth stocks I'm gonna just give you. You got the Realty Income. You have Brown-Forman, which is one of the largest producers and distributors of alcohol. Kraft Heinz, the packaged food and snack giant. Those are growth stocks because they continue to grow over time. They yield high returns and high growth. So those are more of buy and hold stock that you want to buy and hold. You want to just always have a part of your portfolio that you want to buy in at the best average cost that you can get it at, which means the lowest price. If you sell, then you'll sell at the highest price. All right, so those growth stocks. Next, we're gonna consider the tech company. Like I said, in SPY, you see the sectors as of June 8th. Technology is top priority. That's only a given if you think and put 2 and 2 together. All these electronics, they making it smart cars, smart TVs, smartphones, the robots, you know, all stuff like that all evolves around technology. So of course, technology is gonna make up majority of the sector. Apple, Microsoft, Amazon, Tesla, Johnson & Johnson, Nvidia, for sure. You don't have to buy an entire share to actually own the stock. You know what I mean? That's why it's called shares. You can own fractional shares. Like Nvidia is 170. If you don't have 170, let's say you got $100 that you want to invest in Nvidia, that'll give you a half a share. Then you just keep throwing money at it, keep putting money into it as you can until you own a full share. And then once you own a full share, you want to own multiple shares. I'm gonna give you an idea on what you can expect as far as a return. We're gonna go into TradingView. I use TradingView to chart. You can trade, you can connect your broker to TradingView and place your trades directly from TradingView, but I don't. I just use it just to chart. Let's look at Apple, for example. You can see how Apple moved and what it's been doing. Let's look back in 2010. Apple in 2010 was $8, less than $10 a share. And today it's at up 137, but hit a high in January this year, 2022, of 182. Hypothetically speaking, if you bought a share in 2010 and sold it in January 2022, now we're gonna pull up our calculator. It was 1,663% return. So with $8 times, let me see, 15. That would giving you $133 profit, but it's nothing over a 12-year span. But say you bought 500 shares at $8, so you would have bought 500 times 8. It'd be a $4,000 investment times 16.63. You would have ended up with $66,000. So that would have yielded you over 12 years $5,000 a year on an investment. You could start off at a fractional share, but the goal is to own multiple shares of a company. The more shares you have in that company, the more ownership you have. There's websites and stuff. We're gonna get into that in a whole nother video, that you can go look at the outstanding shares and do the actual analysis on the company to see whether it's actually worth buying or not. Tech companies are companies to invest in no matter what, because right nowadays they're still developing, and you could see how they move. It's gonna go up, it's gonna pull back, it's gonna go up, it's gonna pull back. It has its pullbacks, and right now that's what it's doing. Your job as an investor is to buy the dip, buy it at the lowest possible price. Let's say you bought it here today at 130, or tomorrow, the market's closed right now. Say you bought it tomorrow at 136 and it pulls back next week down to like 120. You're gonna be in the negatives, you're gonna be in the lost money. That does not mean sell, because nothing is finalized until you sell. The transaction is not finalized until you sell the security. What would be the best move for you to do is to average down your position. This is just some random numbers I'm putting out there. Let's say if you bought 10 shares of Apple at 136, then pull back next week to 120, and you buy another 10 shares, 120 and 136. 136 plus 120 divided by 2. Your average cost would be about 128. So that'll move your average cost from 136 down to 128 if you bought 10 more shares at 120. You see what I mean? So you average it down. So you need the price to pass 128 for you to start seeing another profit, instead of it passing 136. Mostly what you want to do when you buy shares and market starts to pull back, you don't want to just panic sell your shares. You just want to average down your cost, your average cost of what you bought the shares for. Because if you sell, then it's a finalized transaction and you lost that money and some more. So that's just something to keep in mind. You learn how to read the pattern of a chart. It tells you a story about that company. Now the future ain't gonna look as good as the past because it's already developed, but it's still developing. So you never know, in another 5-10 years these companies could be worth double, triple than what they are today, and you just never know. But that's why it's so important to own a stock portfolio as an asset. It's something to pass down for generations with a big S. This is what builds generational wealth. I learned this myself from scratch. Nobody told me about it. I learned everything off YouTube, and I'm compressing all the information I learned. I'm passing it down to y'all. You know what I mean? This is all information I learned over the past couple years. But let's just say my parents would have bought shares in 2008 or back in the 90s, when the company was just coming out. Look, in 1997, bought shares at 39-40 cents up to that'd be on top right now. You know what I mean? But unfortunately, that's not the story. But it has to start somewhere. You got to break the cycle. If your parents and previous generations wasn't into building generational wealth, I'm here to tell you, it's up to you, man. You got to do it. You got to break the cycle. You got to build that generational wealth. You got to start changing the patterns so the next generation could be into this and they know about stocks and the market, because this is the wealthiest game here. You can have a $1 million business, but you see what are you gonna have to do to generate that million and maintain those millions of dollars in that business. It's gonna be a lot of hard work, which I'm not saying it's easy right here, but it's a lot of hard work too, but it's worth it and it'll last. You have your companies and you can maintain this. It's a lot of good companies out there, don't get me wrong, that'll last for the long term, and those are the ones that you want to invest in. It's smart money, slow money, but for show money. All right, so I'm gonna have to put a cap on this video and leave y'all with this news that you can also use. Go check out the Patreon if you ain't already. We got the starter kits. We got tiers for every budget, no matter how much money you try to spend. As long as you spending at least $10, you can get access to the circle. You know what I'm saying? You got to pay to play, because if you don't pay, you don't pay attention. We got the ones with the signals. If you ain't got time to watch the market, I can do the work for you. Basically, you get in when I tell you to, you get out when I tell you to. You secure your bag, go on about your day. You know what I mean? You ain't got to sit there and watch the market all day. hey, this is what I do for a living. You know what I mean? This is my job. And also go check out the Instagram. We still growing the Instagram page, man. We just got it up, and you know, we trying to build it up step by step, man. We trying to get to them 100 followers, 100 subscribers on YouTube. You know what I mean? Slow and steady. We at 4 subscribers right now as of this video. So be a part of the circle. We gonna grow it, and this is gonna be the business one day. So y'all want to be a part of it, get your access, get your ticket into the circle. You know, you got to pay to play, but it's worth it. It's an investment in yourself, and there's no better investment than that. So yeah, we're gonna wrap up this video. Catch y'all on the next one.